Okay. My name is Sherif Saeed. I have more than 20 years experience in conducting multi-jurisdictional fraud investigation in America, Southeast Asia, and Middle East. I was a former director of forensic for Deloitte Singapore, and I worked in Bank of New York Mellon. I was in Middle East for Mobile. Last I worked for was Abdul Latif Jamil in Saudi Arabia, one of the largest Toyota Lexus distributor in the world. And now I am the Chief Operating Officer for our company, the Synergy Technology Solution. We do software development, and we also provide a lot of technical training that is required. What we are trying to do, a lot of this training that we are running, our objective is to make people aware of what is needed in the real world at the same time and give you some technical background. And today, next 3 days, we will cover a lot of topics. It will be sometime very technical, and sometime it will be more statistical. I hope that looking at your background, you should not have any difficulty understanding the issues. But our objective, our topic is secrets of financial statements. That means we will try to understand what the financial statement is and how to decipher it and how to look for critical information. Now, as looking at the background of all of you, you are somehow related to financial statement one way or another. That means the topic that we will cover will give you insight about your company's financial statement, and hopefully you will be able to add value to your management. And thank you very much for participating in this training. These trainings we are offering just to create awareness among our people about the fraud risk in financial statement. We have seen in Bangladesh companies like Destiny and many other companies going bankrupt, Basic Bank. These are basically part of financial statement fraud and other fraud activities. Another thing I would suggest you that there is a certification called Certified Fraud Examiner program. You guys should look at it when you have time. This program is very, very relevant for current the world, especially post-COVID. There will be more need for fraud investigator, and I hope that you guys will consider doing that. Okay. So today we will cover role of financial statements, and we will define what is a financial statement fraud. Then we cover the financial statement, nature of financial statement fraud. Then we'll look into the fraud versus audit and what are the development that has happened over the year, the impact of financial statement fraud, and audit versus fraud, the relevant guidelines. We look into international auditing standards, US GAAP, and internal IAI, Institute of Internal Auditors guidelines, and see how they are changing, and asking a professional to look into these issues because this is a much bigger issue nowadays. Then we will look into the causes of audit failure. You know, every audit financial statements that we have for listed companies, these are audited by reputed auditors, audit companies, Deloitte, EY, KPMG, BDO, and Grant Thornton, many other companies like that. So they usually provide certain assurance about the audit and the financial statements. And when they don't do their job, and investors and stakeholders ends up losing money. So we will look into that also. And we'll look into the critical role the internal auditors play in the detecting the financial statement fraud, and how to mitigate the fraud. This will be today's, basically we're setting the stage for tomorrow and day after tomorrow, where we'll get into the details about how to decipher and look for anomalies in the financial statement that will help you understand the essence of financial statement, whether there was anything wrong or going on in the company or not. Okay. Then we will go into, okay, we'll start the role of financial statement. As we know, all of us, okay, that for every investment we make, we need to look into the financial statement and see how the company is doing. So what we quickly look into is the net income, earning per share. There are some quick statistics everybody looks at. Okay, and it is very important. The financial statement, it plays a critical role in managing expectation in the capital market. The capital market works because the assurance provided on the financial statement. And the financial statements, they are prepared based on accounting, generally accepted accounting principles. Now, in America, it's US GAAP. In other countries, usually they have the international GAAP is taking over most countries. And in fact, the gap between the US GAAP and international GAAP is also reducing. Now, if you look into these, all these companies, these are only a few of the companies that we are looking at. There are many other companies that has been subject to massive financial statement manipulation. So Wells Fargo, some of these companies don't exist anymore. The WorldCom doesn't exist anymore. Mobilely, they're still operating. HealthSouth, Parmalat, they took a big hit because of the financial statement fraud that was discovered or manipulated by the management. Now, ACFE, the Association of Certified Fraud Examiners, is an American organization. They are at the forefront of all kind of fraud statistics and surveys. They have done survey every year, and their statistics shows that the incidence of fraud in the financial statement is going up every year. Average on 2% every year is going up. So post-COVID, considering what is happening around the world, every company will be under financial stress. Banks will be under financial stress. So there will be some incentive for companies to survive by manipulating financial statement. So these are some critical time that we need to pay attention to. Also, there will be issues with government funding, how it is treated. So all that will be very different going forward. Again, towards the end, we will also talk about certain tools and techniques that every accountant who's graduating from the university should be considering to do that. Business as usual is no longer going to be the case. Even Bangladesh is going to change. A lot of things are changing in the industry. And I will urge you always to update yourself with the technology, okay? Now, what is financial statement fraud? Now, remember the title we have is Secrets of Financial Statements, and I'm talking about the financial statement fraud. What we are trying to do in the bridge is for you to understand how to look for these symptoms. That's the secret of a financial statement. In a financial statement will look very nice, but if you don't look into the details, you will be misled. And we will hopefully, by the end of this 3 days training, we will give you enough information and will create enough skepticism in your mind that you will be able to look for anomalies in the financial statement. Be you are an auditor, be you an internal auditor, or an accountant, or an individual who is thinking about investing in the capital market, or do an M&A. These are the tools and techniques that we'll discuss, will help you to identify critical details about financial statement. So this definition I have from an Australian security organization is, I think, most comprehensive I have found so far about the definition of financial statement fraud. Is the financial statement fraud involves deliberate, misleading, or omitting amounts or disclosure in financial statements in an attempt to deceive financial statement users, particularly investors and creditors. So investors and creditors, they are the largest stakeholder in an organization. Banks and the financial institution are lending money to the organization based on the financial statement. Investors, they are investing in the company based on the financial statement. So when those numbers are manipulated or those numbers are falsified, you are misleading in a material way, then you are misleading the investor, you're misleading the banking and institution, and basically you are eroding the trust in the capital market. And that's more dangerous. That's the difference between the capital market in America and UK, why they are so stable, because of the trust that has been developed over the years, even though they have faced some major fraud cases, but those were pursued, investigated, and action taken. And that's what gives credibility to the market. So financial statement fraud, what is it? It is falsification, alteration, or manipulation of material financial records. Material intentional omission or misrepresentation of events, transactions, accounts, and other significant information from which financial statements are prepared. Now, I want to highlight another thing to you. During the session, if you have any question, use the chat button to place your question. So at the end of the training, we will go through your questions and we will have a more interactive discussion. Okay. And also what we will do, we are recording this event, and after a few days, we will post these events in our YouTube channel. So you can refer back to it. If you forget about it or you want to see what we have discussed, you can always listen to it. I have more materials in the website also. And also we will share with you the slide, PDF version of the slides, so you can take home and use it as a reference. Hopefully this will be something that will be very, very useful for you going forward, and especially in your career. The next we will go. The fraud also involves deliberate manipulation of accounting principles and policies and procedure, and we'll discuss it later on in more details, how it is done and how to catch it. Intentional omission of disclosure or presentation of inadequate disclosures regarding accounting principles, policies, and related financial accounts. We'll look into it. And in fact, a lot of time, people pay too much attention to income statement. Sometimes people go into a little bit into balance sheet, but there's several other information that is already contained in the financial statements are totally ignored. One is cash flow statement, another is the notes to financial statements, and the management disclosure analysis, MD&A, that usually comes with the financial statement. So these are all needs to be looked at if you're going to be a serious investor in an organization. So what are the nature of financial statement fraud? Financial statement frauds, basically when the fraud happens, it's not an accidental thing, it's an intentional. That one thing you have to keep in mind. I hope that by the end of this training, 3-day training session, we will be able to put enough doubt in your mind so that going forward, you will not take anything for granted. Remember, the fraud is an intentional act. It is not an accident. It is not an error. So how financial statement frauds are manipulated? They are sometimes intentionally prepared in a way that misstate the financial position or performance of an organization. We will get into the more detail later on with examples. Misstatement of financial statement can result from manipulation, falsification, alteration of accounting record. So now you're going to at the transaction level. Sometimes it is done at the financial statement preparation level. So when you alter the documents, then you are going at the transaction level. Misleading financial statement cause serious problem in the market and economy. I think this is what I've been highlighting from the beginning. So that's what we are doing today is give you an overview to set the premises for what we will discuss in the next 2 days. That's when we are going to discuss more about the tools and techniques and the results, okay? Misleading financial statement causes serious problem. It causes losses for the investors, lack of trust in the marketplace, and litigation embarrassment for individual and the organization. Remember what is happening now in America or other countries, the COVID-related crisis. It is not a financial statement crisis. That's why you don't see the market reacting that badly. You expect the market to really go poor, transactions should go down. It is not happening because they still have trust in the market. They understand the situation that is happening now is very unique. But as an auditor, as a preparer of financial statements, as a user of financial statement, you should be looking for some sort of information in your financial statement that will discuss this particular scenario and how the organization is going to address it. So these are the things that you need to pay attention to. Now we'll give an example of what happened in the financial statement fraud. We have question of companies taking money, inappropriate loan from the company. These are examples of Adelphia, Tyco, WorldCom. The CEO of this organization, they were borrowing money from the company and they were not disclosing it. In the case of Martha Stewart, what she did, she knew the company is not doing well and she tried to sell her stock before the information become public. That's called insider trading. That is, you are acting on a confidential information that is not public and you are privy to that information and you are acting on behalf of that to take advantage of that. So this is insider trading is a criminal act in most countries. Now, before we get into more detail about discussion of a financial statement and how to analyze it, again, I will have to set three things in your mind, that the fraud triangle. Going forward, you should always keep these three aspects of fraud triangle in your mind. One is the perceived pressure, perceived opportunity, and rationalization. If you look into your organization and if you see these three things present, you most likely are doing something that's not appropriate. We'll not get into more detail about it, but later on we will discuss the cases and we will relate our analysis with these three aspects of fraud triangle. Now, perfect storm for a fraud. One is booming economy. When the economy is doing well, people are not paying attention that much. And any organization that is not doing well as the market expects, they will try to manipulate the financial statement. So booming economy is also a risk that we need to consider, especially if you are an external auditor, that you need to consider. Also, in the booming economy, people are too much focused on the revenue, so you need to pay attention to those items also. Later on, we'll talk about what are the common areas that gets manipulated, so you can zoom in your attention to those areas. Decay in moral values. This is the highest risk that we are seeing that's coming up. Education system, the society is not paying that much emphasis on moral values and ethics. Cheating in the schools and colleges are becoming much more acceptable. There are surveys that shows that most of the students at the university level, school level, think that cheating is okay. And that's an alarming sign, because when these students becomes your employee, just imagine what kind of mindset they're bringing in. And that's very damaging for any organization. Any organization wants to have the honest people in it. Misplaced incentives. A lot of time, the stock options and other deals that is given to the chief executives as a bonus. And that usually drives the incentive for them to run the company. So if the company is not doing well, they're not going to get their bonus. The stock option is not going to get better. So there is an incentive there to manipulate the stock when the market is not doing well. High analyst expectations, especially for listed company. They usually publish what is the expectation of the market for the earning per share. And that is driving the company executive crazy. 1 cent difference can tank the stock price. And that's what we have seen in a lot of the financial statement fraud, the WorldCom and Mobile. They were trying to manage that expectation and the way they did it by manipulating financial statement results. High debt level, this is another thing you have to consider, how they are accumulating debt. The higher the debt, the higher the pressure on the management, because debt servicing is taking most of the money. Especially a country like Bangladesh, where the interest rate is in double digit. The stress on the company is very, very high. Lack of auditors' independence. When it comes to independence, you also have to consider if you have the auditor has only one big client and everybody is a small client, that one client is the bulk of the revenue, that itself is a risk. That will create impairment, independence impairment. Greed of the executives and not enough ethical training in the classroom. So these are the usually identified as a major risk factor for organization going forward. Now, we talked about it again. I will mention it again. This summary is a summary of the financial statement, that it involves intentional deceit, involves attempted concealment. It is not obvious, and there are many red flags that we have to consider. And conviction in the case of financial statement fraud is very, very difficult. But lately, we have been more successful in putting people in jail. Now, where do we stand on the audit and the fraud? So we'll look in quickly the history of it. In fact, the whole audit profession started in 1840. It results from several fraud that happened in UK and Europe. And because of those fraud, the government at that time felt the need that they need to have an organization or a profession that looks into the financial statement. So the whole genesis of the audit profession comes from the fraud. And then between 1840 and 1920, the focus stayed on fraud. They were basically looking to identify fraud in the financial statement. But in the 20s, when the industry started becoming larger and larger, then you have this industrial revolution, then you have this assembly production. The organization becomes so large, the transaction testing, fraud detection on a 100% basis is no longer possible. So what happened is it moved into transaction testing. Between 1960 and 1990, the organization got even better. Nobody knew about $1 billion company in 1960s, in 1920s. By 1960s, several companies are having $1 billion. Now, if you look at it, we have like 2 organizations, almost $1 trillion in value. So that as the volume is increasing, your approach has to adjust also. Between 1960 and 1990, audit profession moved on a risk-based audit and reliance on the system. So we don't do 100% transaction testing. We take sampling. We target the risk area and we focus on it. And we have ERP system and other automated system, and we rely on the system to maintain the control. But lately, since 1990, there have been so many major fraud. Like Barney Airbus in the most recent one was $65 billion involved in that hedge fund crash. So now the fraud focus is again coming back, and we will look into the discussion later on. Now, I'll give you some example of how financial statement fraud has damaged organization. One organization, Mobile, it was the second largest telco company in Saudi Arabia. They manipulated their financial statement, almost 1.7 billion. And the company share fell from 90 riyal, which is close to $25 per share, to $3 per share. Investors lost billion. The company is still struggling to recover from that incident. Satyam is an Indian company, IT company, and they did a manipulation of $1.5 billion manipulation. They were showing 1 billion cash that did not really exist, and it wiped out billions of investors' money. Remember, Satyam was also registered in UK and New York Stock Exchange. So everybody lost money. WorldCom, I was personally involved in this particular investigation. And there was $11 billion manipulation in the revenue. I worked in the revenue section also. And 30,000 people lost their job, and 180 billion lost in the investors' money. Enron scandal, similar fraud happened in the 2000, 2001, 2002. It wiped out $74 billion of investors' money. And not to mention that it also, all the people who worked on Enron, they also lost their job. Their family had to go through hell because of this fraud. BCCI, we know, I don't know if you guys are familiar with it. A lot of us, I know when in the 80s, this was one of the star banking service, and the company went bankrupt overnight, and 14,000 people lost their job. 1.5 billion in deposit was lost. Now we look into some of the audit regulation that is now in place. We look into the IAS standards and US GAAP and IIA standards. International auditing standards, the IS 240s, redrafted one, they basically require that you need to maintain professional skepticism. You need to do a brainstorming discussion among the engagement team to understand what are the fraud risks of this particular organization they are auditing, and then conduct a risk assessment. And US GAAP, there have been a little bit more discussion on it. It started from 1972, SAS 22, and then now most recent one is SAS 99. There is a whole statement on consideration of fraud in financial statement audit that provides guidelines on what to do for the auditors to make sure that financial statements are not materially misstated. Now, common areas of manipulation. That question comes often that, okay, what are the areas that we should look for? Is there any trends that has been found to be manipulated more often? To tell you the truth, when they manipulate financial statement, they are looking for a quick fix. They are not really thinking through that much. So what are the area they are going to do first? Just imagine your company. If you want to manipulate, which account you're going to hit first? Revenue. The statistics that were SEC, they did a survey of organizations that they have taken action against between 1997 and 2002. They found 56% of the cases that they have investigated were related to revenue recognition. The second highest or prevalent one is the improper expense recognition. Then number 3 is inadequate disclosure in the management discussion and analysis section. Then you have business combination related fraud, related party disclosures are not enough, non-monetary round trip, FCPA violation. So first 5 items, I would say you should pay attention to. Even if you're an investor and you're looking into the financial statement, we will talk about the techniques that you can use to see if there is anything unusual going on. Now, COSO, this is another organization in America. They also did another survey, independent survey of different organizations. But COSO's area is much more wider. SEC did only their enforcement actions that organization they have taken action against. COSO is an independent body, so they are looking into much wider aspect of it. So between 1998 and 2007, they found out that, again, their survey, if you take SEC survey and if you take the COSO survey, you will see some similarities. Revenue recognition, again, is the number one. The second item is the overstatement of assets. Third item, understatement of expenses and liabilities. Then the misappropriation of asset, other miscellaneous techniques, and disguised through use of related parties. More or less, the COSO study and the SEC study, they are basically telling you the same story. So for you as a professional, or for we as a professional, when we are looking into financial statement, we should first make sure that these areas are covered. The most common form of fraudulent earning management are, number one, fictitious revenue. The recognition of revenue from false sales or false customers. Because revenue is easy to manipulate. So here, companies have to be, we as an auditor or investor, we have to pay attention to any unusual movement in the revenue. Second most common area is improperly timed recognition. So especially in the construction industry, you have percentage of completion method of revenue recognition. So if you manipulate that, change the percentage estimate. If you manipulate it, you can increase your revenue recognition. So or you're recognizing revenue that is not for that period. That is, you have received money for the whole year and you recognize the revenue right away. Then you are manipulating it because you should be allocating it over the 12-month period. Then comes improper expense recognition, which includes failure to record expenses or losses by improper capitalization. So you're capitalizing expenses, deferral or lack of accruals, overstate ending inventory to reduce cost of sales, understate bad debts or loan losses. Workcom did that. Improper use of restructuring and other reserves, failure to record asset impairment. This is another critical area that we need to pay attention, especially in industry where technology is changing so quickly. In the telco industry, the life of asset is something that you need to really pay attention to. Overstatement of asset, what are the areas? Overstating existing asset, number one. Second is recording fictitious asset. I have worked in an organization when we are doing the audit. When it came to my turn to lead the audit, and I saw that they have 3 buildings on their financial statement. So I said, okay, I want to go and visit those buildings. So when I took the visit, I realized that 2 of these buildings they're claiming as their asset are basically leased property. So they're just renting it for 1 year and they're showing it as an asset. So we had to take those off the balance sheet. Capitalizing item that should be expensed. This is another thing happens, especially when you're installing or during the installation process or setting up process of organization. You can capitalize some of the salaries and other expenses that relates to the installation, but you have to be careful. Sometimes people organization try to put too many items into the capitalization area. Overstatement of assets. Assets that most often misstated are accounts receivable. Again, account receivable relates to revenue. So the way you boost revenue is you boost account receivable. People are not, especially investors, they don't go into that detail whether the account receivable balance is going up or down. They look at the revenue went up or not. But in the background, if you see the account receivable is going up, as the revenue is going up, then there is a problem there that you need to pay attention to. Inventory also, property, plant and equipment, loan and notes receivable, cash. This is the easiest to audit, also most dangerous when it comes to manipulation. Parmalat, they manipulated $4.5 billion in cash account. They did not have that cash in their account. They falsified the audit confirmation. Investments, patents, natural resources. Now, investment nowadays is becoming a much more challenging because you have so many types of derivatives that is now owned by the organization and that is so difficult to price. So it's easy to manipulate the price of investment, especially alternative investment, when you're holding swaps and other derivatives. Patents, you may claim that you have more patents than you actually have. Natural resources, especially companies like coal industry, oil and gas industry, they always try to show that they have more reserves because that increases their value than actual. So there are ways to make sure that it is not inflated. Now, we'll talk about causes of audit deficiencies. Why do you think the audit fails? Auditors are doing their job. Why it is failing? Again, there was a SEC study. They did it from 87 to 97, and then in 98 to 2010. So this covers quite like almost 20 years period. And the results are surprisingly consistent. Number one reason for audit failure, the reason the audit did not identify the misstatement, was not gathering sufficient audit evidence. Not gathering sufficient audit evidence is number one. I mean, this is a pretty comprehensive study. And I can guarantee you it has not changed at all. Exercise due professional care. That's the second reason for audit failure. Demonstrate appropriate level of professional skepticism. I mean, we are talking about the core of the audit, the bread and butter of the audit. These are the reason for deficiencies. Obtain adequate evidence related to management representation. So these four areas has been consistently the reason they found that's causing the financial statement not being misstated. Again, comes down to number one item. They are not gathering, failure to gather sufficient audit evidence is the number one cause for audit failure. Now we will look into a little bit about the role of internal auditor in fraud detection, okay? Internal audit profession, they are guided by guidance from Institute of Internal Auditors, IIA. It's an American organization and they have branches and chapters almost every country. Even Bangladesh, they have a pretty strong presence. But still in Bangladesh, we don't have that many internal auditors, CIA professionals. Hopefully that will change in the future. Their publication, Internal Auditing and Fraud, issued in 2009, the publication 1210. It says they must have sufficient knowledge to evaluate the risk of fraud and the manner in which it is managed by the organization. But internal auditors are not expected to have expertise of a person whose primary responsibility is detecting and investigating fraud. So they don't need to be an expert, but they need to have enough knowledge to assess whether there is something going on or not. If they suspect something, they then need to consult with the professional and exercise due professional care. A skeptical mind, that is always needed. And another publication, 2060, reporting to senior management and board, CAE, that is Chief Audit Executive, must periodically update the senior management and the board about fraud risk, governance issues, and other matters. Now, if I am the person, external auditor, auditing a financial statement, I will ask for that CAE report to see, did they mention anything about financial statement, anything of the fraud risk to the management? Because this is required. It's no longer optional. Okay, it's required. Now, another frame on the risk management, they must evaluate the potential for occurrence of fraud and how organizations manage fraud. Okay. And engagement objective must consider the probability of significant error, fraud, and other exposure when developing engagement objectives. In fact, IIA is providing enough guidance to the internal auditor to actively consider the manipulation in the financial statement. So they do have responsibility to look for it, but they also need to have the qualified people in their team to make sure that they do it right. Another guideline from IIA is internal auditing is an independent, objective assurance and consulting activity designed to add value and improve organizational operation. Now, here the question comes that is fraud detection going to interfere with internal auditing stated goal of add value, consulting, and become a business partner? So the first statement, this is the mission of internal auditor. And the second, their guideline they have, is it going to contradict? We don't have an answer for it. That discussion has been going on for a long, long time. I don't see that is settling anytime soon, but it's good to know for your own benefit that this is required, okay? Now, back to the basic. To mitigate fraud risk, you need to have the right mindset in the organization. You have to have a good whistleblower program established. Question financial results when they're always on target. Question sudden changes in auditors. Have skeptics on the board of directors. That is, you need to have an independent board of directors with the right experience. Analyze revenue and account receivable. Review cash flow statement carefully. At the end, gather sufficient audit evidence. Now, this is for today. It was just an introduction to what is going to come tomorrow. Tomorrow, we are going to cover the fraud statistics, how financial statement fraud occur and concealed, and outline the framework for detecting financial statement fraud. And we will talk about various tools and techniques. And on the third day, we will go by account and see how we should look into those accounts and look for anomalies and how to interpret those results. So that's all for today. Let me see the questions that we have so far. Excuse me. Okay. Okay, one question, if the lease is finance lease long-term, who will show the lease property? Now, this is a much more accounting question, okay? This is, we need to have a separate session on it. Today's focus is not lease or any particular line item. We are looking at financial statement manipulation to understand that, or discover secret of financial statement. So that's more of an accounting question, and I do not have, I will not discuss it in this session. Okay, how do you get reference material? I will share the slide with you. Now, what you can do for IIA, you need to be a member of Institute of Internal Auditors, and or if you know anybody who's an Institute of Internal Auditors member, you can request them, and then you can get the publication. You can also go to IIA website and buy the publication from their website also. Any other questions you have? You can use the mute button to make your place your question also, no issue.